For years, this institution was written off as slow, inefficient, and burdened by bad loans. But it quietly, without noise, without headlines, it cleaned up its balance sheet, strengthened its capital, and brought asset quality under control. Today, return ratios are going up, provisions are comfortable, and valuation still doesn't reflect the improvement. In this video, we break down the numbers, the risk, and the real recovery story behind one of India's most disciplined public sector banks. Hello everyone, I am Sebi George and you are watching Decoding Equity, where we break down the companies purely through numbers and not by noise. Yes, we are talking about Canara Bank, one of India's oldest PSU banks, and today one of the most disciplined turnaround stories in the sector. Let us start with the financial performance and asset quality journey. Even after the turnaround, this bank continues to trade at a discount to PSU peers. Compared to State Bank of India, which enjoys a leadership premium, and Bank of Baroda or Union Bank of India, which are closer to their fair valuation, this bank is still priced conservatively. If asset quality remains stable and ROE sustains in double digits, valuation rating rather than the balance sheet growth could play a larger role in returns if performance sustains. As per sector data, Canara Bank currently delivers the third highest ROE among listed Indian banks. This places it ahead of most of the PSU peers and several private banks, clearly highlighting the strength of its turnaround and operating efficiency. Importantly, the improvement in return ratios is not driven by leverage or one-time gains. It is largely as a result of lower credit cost, improved asset quality, and stable operating performances, making the ROE more sustainable than in the past cycles. Canada Bank is currently trading at a price to book value of around 1.09 times as per the screener data. For a PSU bank that has restored double-digit ROE and improved asset quality, this valuation remains reasonable rather than expensive. If profitability sustains, returns are more likely to come from gradual re-rating of the book value than from aggressive balance sheet expansion. Canara Bank has delivered a strong and consistent rise in profitability over the last 4 years. Net profit has increased from Rs 6,158 crore in FY 22 to 11,345 crores in FY 23 and further 15,401 crore in FY 24 and 17,692 crore in FY 25. On a TTM basis, trailing 12 months, profit has moved up further to around 18,415 crores, indicating that the earnings momentum has continued beyond financial year 25. While the quarterly profits can show some volatility due to provisioning and timing of recoveries, the annual trend clearly reflects a sustained improvement in earnings. Canara Bank has shown a sharp and consistent improvement in asset quality over the last 13 quarters. Gross NPA has declined from 5.9% in December 2022 to nearly 2.1% in December 2025, while the net NPA has fallen from around 2.0% to just 0.45%. This steady reduction quarter after quarter indicates that the stress in the loan book is being resolved structurally and not postponed, strengthening the bank's overall risk profile alongside a cleaner asset quality. Canara Bank's capital adequacy remains comfortable, giving it room to grow its loan book without stretching the balance sheet. This ensures that growth, if it comes, is funded from strength rather than leverage. With asset quality improving, the bank has also built adequate provisions, which provides a strong buffer against future stress and reduces earnings volatility. The key risks remain typical to PSU banking: potential slippage if the credit cycle turns, margin pressure in a falling rate environment, and the structural overhang of government ownership. To sum up, Canara Bank represents a clear, numbers-backed turnaround, rising profits, sharply improved asset quality, comfortable provisions, and double-digit return ratios. Valuation at around book value reflects recovery, but not full optimism yet. While risks typical to PSU banking remain, consistency in execution will be the key driver going forward. For long-term investors, this is a story where the discipline matters more than short-term stock movements. This is CSAP Charts from Decoding Equity. See you soon with another video. Goodbye for now.